All right, so this is trade camp day, I believe 7, if I'm not wrong. Anyway, if I'm wrong, we'll just see at the end of this, and I'll just fix the title. Anyway, today we're going to be talking about two things, and it's equilibrium. What was that? Okay, so it's equilibrium and time. Now we'll talk about time first because we could get through it relatively quickly. And remember, I talk about this very quickly in all this. So I want you guys to write all your questions and comments in the comment section, and I reply to every single one. It's very important because for me, all of this is already known, right? But for you guys, it's brand new. So I'm trying my best to teach it. It's kind of hard, but I'm going to try. All right, so let's get into time. So we all know there's market open, right? I mean, let's get into a regular chart, right? So there's market open. All of this overnight, after market, right? From after 4 closes to 9:30, which is market open. You can see all of this is chop pretty much, right? Up until 8:30. Well, 6:25, I don't trade any of these sessions. Up until 8:30, you really start seeing volume, right? And then 9:30 comes. This is market open, as you can see. Lot of movement. Now I'm going to say this. You want to be optimally trading between 9:30 and 11. If you're going to do it in the morning, you want to do it from 9:30 to 11. So take that note, write it down, and the reason is because that's when there's the most volume in the market. And another reason why you don't want to be trading after that, well, at least from 11:30 to 1, is because there's a lot of consolidation from that time. As you can see, these are clear liquidity runs, right? This is clear liquidity. Can't speak. Clear liquidity runs. And then you get around 11:30, 11:50 after that. What does it do? 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 candles on the 5-minute chart of pure consolidation. So that time is the worst time to probably trade. It's from 11:30 to 1. It's the most chopped. You can't entry, you can't find any good setups at that time. And even if you do, you're highly probable to get stopped out. Don't get me wrong, there's still some times where you can trade during that time, but dude, I never do. You'll never see me do that. It's just not worth taking that risk with these choppy candles. It's just all consolidation. You want to find clear liquidity runs like this. As you can see over here, 9:30 market opens, you have a clear push to the upside. And you want to ride this push, right? And you have a clear run to the downside up until that time starts coming around. There's that consolidation. And then there's one more time I will trade from 2 to 3 to like 3:30, right? Like ICT says, which is the guy I was learned from, he said from 9:30 to pretty much 10:30 from 10 to 11 is ICT silver bullet. So he always says it's a great time to trade because that's when the market's the most filled with volume and there's always going to be some sort of entry for you to get filled at. Now sometimes the open looks really bad. And I mean, it hasn't been bad recently at all, but sometimes the market open will just be chopped. And so that literally tells you that towards the end of the day is when it's going to be running for the liquidity. So next time I would trade is from 2 to 3, the PM silver bullet session. That's the New York PM session silver bullet. And 10 to 11 is the AM silver bullet session. So as you could see, lunchtime is starting to end over here, and you see 2 o'clock hits. What does it do? Clearly runs. Clearly there's a liquidity run from 2 to 3. I mean, this whole move right here would make you bank. And these are the moves you want to catch. You want to find some form of liquidity in general, or you just want to catch this move, right? I'm not going to go into depth on why take this entry. I'm trying to just slowly, step by step, walk into it. So the times you guys should have written down right now is 10 to 11, 2 to 3. Those are the silver bullet. And you're probably asking, oh, why not 9:30? 9:30 is still okay, but you want the market to like get rid of all that market open volatility, because a lot of people, you don't understand really the direction up until like 9:50. Up until 9:50, then the market kind of makes it clear where it wants to go for that specific time. Additionally, I want to say one more thing. For the people that are just starting out trading, you're most likely going to do options. I'm not sure, that's just how I did it, right? You're probably going to do some options. So what I would say is try not to hold your options too long, because I'm going to give a very important tip right now that not many people teach. Is there's something called theta on an option. And let me see if I can log into one of my accounts and show you what I mean. All right, so if you're doing options, which most of you guys are probably doing, this is theta, the rate of decline in the value of an option due to the passage of time. Now, it's pretty straightforward, but this plays a crucial role on options. This is what makes me probably lose my most money. It's not getting the market right or wrong, because most of the time I'm correct. It's theta. Now, that's a completely separate video if you guys want to have that, because I don't know if you're traded funded or options or any of that. So that's a completely separate video. But for anyone trading options, try to keep your trades to a minimal amount of time. You don't want it to be more than an hour, I'd say. Especially if you're buying same day options. Do not make it more. You don't even want that to be more than 15, 20 minutes, because it's terrible. And what I mean is, let's say you buy an option same day right here, a call to go long, right? Now you could catch this whole move, but if it like chops for like 10 minutes, your call is going to be worth less than it is already, than what you bought it at. Even if the market doesn't go down, if it just stays here in the same spot, it's going to be worth less than it already is within 15 minutes time, which sucks. I'll be honest, it sucks, but you got to work around that. And the only way you really do is by buying further out to date calls and puts. Anyway, let me just get off this tangent and pretty much just I just want to end that off with make sure you just get in and out of your trades quickly. You don't want to be losing money when you're on the right side of the market. You understand that? That's like the worst feeling, when you're literally predicting the market and then you're still losing money because of theta. Sucks. Anyway, let's get into the real utility, right? Equilibrium. Easy. Probably the easiest one, but useful. You want to see? I'll explain it. You get a price run. Let me draw that better. Right? So you get a price run here. Now, the way you find equilibrium, and I'm pretty sure you guys would know what that means. It's the equilibrium, the 50% mark, is you grab one of your tools like this. Oh, wrong one. You'd grab the fib, right? And I have different markers on there, but if you're in the middle of a price run and you can't find an entry from down here, you want to look for equilibrium to get tapped in. So it doesn't get tapped back in. You wouldn't really like to enter there, because the reason being, and let me remove all these 1 second. The reason being you don't want to enter in over here is because this zone right here is considered a discount. If it's a bullish market, this zone's considered the discount. So obviously everyone wants to buy something for a cheaper price. And this zone right here is considered the premium. Nobody wants to buy something for an inflated price, right? So you could just pretty much keep measuring out. Once you find equilibrium, boom, taps in, you'd go long off that, and you get it in at a relatively discounted price. Now, I know on that drawing it just doesn't do it justice, but I guess we could see over here, and since this is a news candle, I'll measure it. Let's just see where it lands over here. Perfect. So market always like I said in one of my previous videos, market hunts for three things: liquidity, which is high underneath highs and lows, inefficiencies, and equilibrium. Now we can couple those two things because we learned a fair value gap, right? We have a fair value gap right here. And it was within the equilibrium here. So the market comes down because we know it's bullish. The overall structure is bullish. The market comes down, taps into equilibrium and a fair value gap. So rebalances to equilibrium and rebalances to a fair value gap and then pushes on up. That was a beautiful entry right there. You obviously want to look for a little bit more confluence, but you could yeah, right off of this inversion. If you go on the 1 minute chart, you have this inversion fair value gap, and you could have entered it in pretty much off that, and that would have been a beautiful trade. That was actually an easy one that I just ran into. Anyway, let's look for more. I know some off the top of my head. That was a previous trade that I took. Let me see. We can say this whole price run, I guess. Like, if you don't know where you want to enter, if you know this is a bullish structure and you want to enter, and you want to see if you can get in at a discount range, just pull out the fib, look for equilibrium. Market always comes to it most of the time. You could enter in up, ride it up, right? Comes into the equilibrium. I'll give you another example that's going to make it very clear, like usual on this weekly chart, because it's highly manipulated. This is the course where the market makers really use things. So, as you can see, COVID, the scam, right? This, whatever this is, like, completely drops off. Dude, let me get a clearer chart. Let me go on ES. Completely drops, right? Takes out this low, so it sweeps this liquidity, demolishes for like 5 weeks, right? That's worth years in just 5 weeks. So everybody went broke there. And I'll show you how to measure the equilibrium right now. So you're probably looking at this. This is one price leg right here. It's just pure bullish. So if you want to find the equilibrium of this price leg, and this is weeks of time, remember. Hold on, this is a bad chart. Do it on NQ. I remember. Oh, let me turn on my magnet. Okay, you want to find weeks of equilibrium. What does it do? Comes down, taps into equilibrium, goes back up. Sometimes it's not just a wick, right? Sometimes it is, though. Sometimes it's just a couple candles. Sometimes it's the wick. But as you can see, run up, and look how perfect. Look how perfect this is. It's so manipulated. It's just pure manipulation. I mean, look at this. This is insane. So it comes into that equilibrium. That's just one showing, right? And that's over years. Now we can get technical, right? We have this price leg from this high, right? You always want to measure from the highest high to pretty much, hold on, let me get this magnet off, to the low within that, right? And so what does it do? So within this price range, and you're probably asking why not this low, because this is the low that was created within this price range. Came back up into the equilibrium, rebalanced into this fair value gap, and fell so hard. And now look, you can measure it from the other range. From this high to this low. What does it do? Taps right back into equilibrium. When the structure is clearly bearish, right? The structure is clearly bearish here. You want to measure the equilibrium. So this would become the discount range up here, and this would become the premium because it's bearish. So you're looking to buy it high. I mean, yeah, buy it high and sell it lower if you're buying puts, clearly, right? So it comes into this discount, and you get it for a discounted price. Now, once the market structure shifts happen, right, and you get this leg here, you see this leg right here? It sweeps out this low. It breaks structure to the upside right here off of this high being closed above. Now you can find the equilibrium of this and enter. And what does it do? Well, you can really do it off of this high here as well. So it's up to you. But what does it do? Taps into equilibrium perfectly and runs up. Taps into equilibrium perfectly and runs up. Happens all the time, every day. Anyway, thank you guys for watching. Good luck trading. See you in the next one. Peace out.